All right, so hello everyone and welcome. This is actually our last session of the 6th International Workshop on Financial System Architecture and Stability. Before it started yesterday and we had lots of sessions of academic papers, and this is the industry panel I'm really excited about. So to begin, I would like to acknowledge and respect the Lekwungen people on whose traditional territory the University of Victoria stands, and the Songhees, Esquimalt, and Salish people whose historical relationship with the land continues to this day. So my name is Basma Majerbi. I'm a finance professor at the Gustavson School of Business. I'm the co-chair of the conference, along with colleagues Rima Ayedi, Michael King, and Christy Stevenson. And every year, it's been a tradition now. We organize, in our workshop, we organize a public panel discussion with industry leaders such as yourself. And the objective is to create some public awareness and also inspire academics to do research on emerging finance topics that have relevance to practice and policy. And this year, it's a happy coincidence that our industry panel also coincides with the launch of a new partnership that IESVic is having with Foresight. So it's a joint event, and the partnership is represented by VI3 Hub, so Vancouver Island Impact Investing Hub, and the Institute for Integrated Energy Systems. And I don't know if Andrew is here, I'll pass on to him later on to talk about that. So the Impact Investing Hub at IESVic is a new multidisciplinary initiative at the intersection of climate action and impact investing. And we are hoping to create a platform for collaboration in education, research, and community engagement on topics related to impact investing, particularly with the focus on climate solutions. So in today's discussion is focused on Cleantech as part of our partnership, as I mentioned, but also Cleantech is a really important and strategic sector from the investment community perspective, from a perspective of climate risk and opportunity. And so both in Canada and globally. So Cleantech has a promise to help with the massive decarbonization challenge that we are facing if we are to meet our commitment to net zero by 2050. And today's expert panel, so I also wanted to mention also that the expert panel in sustainable finance had a specific recommendation about Cleantech, and that is recommendation number 11, which talks about how do we define Canada's clean technology market advantage and also financing strategies. So hopefully with today's panel, we'll get a better understanding of some of the issues. So without today I'm joined with a very experienced panel, as I mentioned. So we have, sorry, I'm having trouble with my computer here. So Jeanette is going to start from Foresight. We'll start us off with the short presentation. I'm very pleased to also be joined by Christine Bergeron from Vancity, and who happens to be also had a lot of experience in Cleantech from a venture capital perspective, and also Mike Winterfield from Active Impact Investment. And Mike will share his experience with raising funds from investors, but also supporting Cleantech companies, such as companies like Sahar's companies that is providing some great solutions and so on. And also Adam from BCI is going to share the perspective from an institutional investor such as a pension fund. And we do have Jed McClean, who has been a founder himself and also worked with a lot of innovators in Cleantech. So without further ado, I'm going to just pass it on to Jeanette, and then we'll have a discussion.
Thank you, Basma. And can everyone hear me okay? Wonderful, and hopefully my screen's showing up. And thank you to my team for putting my face front and center on this title page. I really appreciate it. Really, the most important thing we get to today is to hear from these amazing people that Basma has brought together to discuss, what not only sustainable finance and impact investing looks like, but the reality is that more than ever, this is important because we are on an aggressive path as a nation for recovery efforts as a result of COVID. And we also know more than ever that net zero targets and the economic transition to net zero is not only something we need to do for the country, but also something we need to do because if there's business opportunities, and unfortunately, whether we like it or not, to get the capital required for us to make this transition, we do need to make sure that the business case is clearly presented to the stakeholders who can really make an impact. A little quote, always to kick off a session, the net zero tipping point has arrived. Almost half of the assets managed globally is now committed to net zero emission targets. And I don't think anyone here would debate that. In fact, more and more, I'm excited to see if we get over the half point and into 75% plus. With that said, to talk real numbers, we're looking at about $100 trillion investment requirement by 2050. And if you start to look at total economies by countries, $100 trillion is a lot of money required. And if we think about the depths of the investment opportunities from a clean tech perspective, everything from ag tech to mining infrastructure, you can see why this is not only a challenge, but an opportunity for us to come together and talk about how we're going to mobilize these resources in an effective way. A little bit about Foresight. We are Canada's largest clean tech accelerator. The term accelerator has traditionally meant that we focus on the innovation community and SMEs and ventures. But at the end of the day, for us, we take quite a broad ecosystem approach. If we don't have industry, investors, government, and academia at the table supporting the innovation community to make sure that we are delivering problem, data, and market-driven solutions that can be adopted more quickly, then we don't think that we're doing our job. And it's just, even just seeing, Mike and Jed on the call today, and Christine, Vancity is just a longtime supporter of all these efforts. Solaires being a solutions provider, these are the types of convening that need to happen. And so, thank you for IWFSAS2021 for making this happen. Basma asked me to sort of go through a few of the fundamentals in terms of what we're seeing on the capital and finance side of things. Before we do that, though, I think we can all recognize the term clean tech. If you look back at sort of the early 2000s, mid 2000s, clean tech 1.0 was sort of the era. It was a lot of renewable solar panels, or solar energy, wind turbines, etc. Now what we're seeing, though, is that the term clean tech has really migrated across all industry and sectors, and it's finding itself in places and forms that probably we didn't predict would happen and so quickly. And so we sort of break down clean tech into both a sectoral and technology definition. The sectorals that are most, ambitious or need to be ambitious are mining. Mining is going to be the fuel for technologies. When you think about lithium and battery technology, oil and gas, forestry, bioeconomy, agriculture and food, water and food security. How are we going to sustain our quality of life without making, quite significant clean tech investments in these areas? And then, of course, transportation, built environment, manufacturing, and waste management. Then we get into sort of the enabling technologies. And for us, we reflect on things like water management, carbon capture, electrification, renewables, and alternative energies. So things like biofuels, hydrogen. Hydrogen's a hot topic, especially in BC right now. But we can't overlook the things such as data, digital, and AI, automation, and robotics. Those things are also going to allow us to be more effective, especially when robotics can be electrified to replace some more traditional tools that are used in certain sectors. So that's our definition of clean tech. Going back to 2019, many of you are probably familiar with Globe. They do a BC and a Toronto series. They alternate every year. And in Toronto, they've been holding the Globe Capital. And I recommend everyone to attend if they have the opportunity. But more importantly, in 2019, they were starting to convene stakeholders, and Foresight was a sponsor of these efforts. And we were trying to think about what are the real types of capital required at each of these, stages of clean tech innovation, all the way from ideation to scale up. And then who are the players, and what do we need to do to make sure that we are moving fast enough, and again, putting the right parameters in place so that investments can start flowing more quickly. Back in 2019, a lot of the challenges that people were focused on are sort of the commercially viable or near viable solutions. So all the scale up funding, and I'll get to a quick opinion on where we are today. But just to take a step back and look at the landscape, really, we do have a very strong government support network here in the country through R&D and grants. There is a lot of philanthropic initiatives that are supporting impact investing. Then we get into angel investing. In BC, personally, I think that's a little bit of an area where we need to ignite new angel investors spring, and many folks are doing some great initiatives to get more, I guess, the new generation of angels at the table. And then we get into sort of the traditional venture capital, corporate venture capital, before the companies become strong enough to be an interesting investment opportunity for private equity, public markets, and debt markets. Now, on the private equity side and the public market side, you're obviously hearing things like the term SPACs, and we've actually had a local company called Loop do an announcement there to go public. But the real dynamics have only started to shift in the last sort of 18 months, maybe even 6 months. So I look forward to seeing what some of the other panelists think here. Breaking it down another way, and we can share these slides after, Basma, but when you start to think about the actual sources of these groups, how do we make sure that the mechanisms that are provided to the innovators and industry so that they can adopt the technology and scale the solutions to the needs of those buyers is just making sure that our recommendations to the funding agencies align with what their goals are and what parameters that they have the flexibility to set. So, I mean, friends and family office angels, those are individuals. It's a lot easier to navigate conversations. But how have MyTax, SHRED, IRAP, SDTC, ERA, and BDC, if you don't know the acronyms, that's okay. But a really great example of what's evolved is SDTC. Now they offer rolling intakes. They now have a little bit of a seed fund program. So there's lots of ways that they're open to hearing feedback from initiatives like what IESVic's putting together so that the programs really work for market conditions. And then, of course, you can work your way through here. I'm really interested in seeing, what Christine's thinking with on the banking side. Some banks do things like SHRED financing. So if you're really, getting a couple $1 million in SHRED to get access to that capital sooner. And I know there's a lot of navigation now on, supporting ventures that do things like clean tech as a service, or analyzing sort of the debt financing opportunities, given where industry's going and some of the strong indicators we're seeing from an adoption policy side. We at Foresight, taking it back a level, our goal again is to support the innovation and venture community. We have investor readiness programs, and that's where we just dig into the fundamentals around, okay, how do you pitch? What type of funding should you be getting? What's your cap table look like? What kind of term sheets and all these other pieces? So we have a program launching. If you're interested in going through that, don't hesitate to reach out to the team. So I thought before we dive into the open discussion, just outline a few hot topics that we're seeing in climate finance. Again, that's not the who, that's the what. Some of these are very government focused. Some of these are, of course, we're going to let the other team folks on here talk about some of the market drivers. But these are some things that we've seen with different partners. We did an initiative with the Cleantech Alliance in Canada here on tax credits and first loss capital pools. So tax credits, things like that are very common in the mining sector, opening those mechanisms up to broader clean tech initiatives so that if industry is adopting clean tech, they get certain tax breaks. We're also seeing a lot of pressure on investor thresholds. So the angel community, if you're familiar with sort of the $1 million or 1 million threshold that an individual investor needs to pass in terms of assets to be able to make an investment. Now that we're seeing things like Kickstart programs and, 5 people want to pool 500 people to put in $5,000 each. How can we look at investor thresholds that still ensure that the average consumer is not at risk, but they can participate in this great, funding and market opportunity? First loss capital pools, they're more common in other parts of the world, but essentially it's a great way to attract new venture capital into the region at all stages, and Mike might have some more commentary on that. procurement policies. We hope to see some pretty ambitious procurement policy, both at the federal level, and I'm sure a lot of the provinces are working on how do they update their procurement policies, because those allow local ventures to showcase their technology in real situations in domestic market. And that's what the international buyers and investors want to see here at home. And then, of course, we are moving into a bit of a Cleantech 2.0 era where the types of business models and the types of technologies being incremental versus transformative, although we need both, are just opening up the opportunities to be much more broader and distinct, and give people that perhaps weren't traditionally investing in clean tech a little bit more comfort that they can take a dab in it to get a win, and then of course start thinking bigger on how they want to invest. Going back to the Globe Capital piece, so again, with Globe 2019, those were the initial findings. In 2021, we participated in a scaling clean tech thing. And this is where I just wanted to close off with some comments. We've seen quite a big shift in sort of the capital environment here in Canada. A lot of people were concerned about scale-up financing. We just couldn't get companies to cross that scale-up chasm. And now we're seeing programs like the SIF, and we're seeing big, money being offered through different programs to help the scale-up side. So what we identified is if the scale-up funding's there, what's happening at the earlier stage financing side? And I think Mike's going to have some commentary there. And then what can we do as a collective to also make sure that industry is really supporting testing and pilots, and that government is providing regulatory support, and that business models, when we're supporting the ventures from an accelerator perspective, that we're really supporting them to have business models that accelerate the adoption of their specific technologies. And then, of course, making sure that there's product market fit across the board, because those are more investable companies. Anyways, a little bit of insight. I'm sure I could ramble on forever. You don't want to hear from me. We want to hear from the panelists. I will stop sharing my screen and pass it over to Basma.
I'm mute, sorry. Thank you very much. Yeah, this is a great insight. And maybe as you suggested, perhaps we can start with the provider of, hello, do you hear me?
Yeah, I tried to call you.
Okay, wonderful. I'd like to, maybe start with the providers of finance in this panel to give us their perspective in terms of, how their view on the clean tech sector and what you are doing at the moment, just to start off the discussion. And maybe Christine, I'll start with you, and then I'll pass it on to Mike and Adam.
Sure, great. Good afternoon, everyone. I'll start actually by indicating that I'm actually coming to you today from the beautiful lands of the unceded Coast Salish territory and the Squamish, Musqueam, and Tsleil-Waututh nations. And I'm always feel so privileged to live, work, and play here. So Vancity, I know there are a few Vancity related individuals on the call, so hello to all of you. But for those who don't know, we're Canada's largest credit union with over 550,000 member owners and 30 billion in assets. So we're a values-based, purpose-driven organization with the focus of building a better tomorrow. So one that's fair, one that's clean, and ultimately our work is all in service of building an economy that puts people and planet first and really enables every person to thrive. So it's not only about those who are members of the credit union, but really trying to see that out in our community. And as a financial institution, we do make important decisions every day about who gets funded, who doesn't, and as such play a pretty important role in determining the type of society that we will have in the future. We are certainly not the only ones doing that, but we're pretty large intermediaries. So for Vancity, throughout our history, we have had a strong focus on environmental sustainability in the broadest sense. And over the last decade, we've been trying to measure that impact by counting our assets, what we lend and our investments. We call them triple bottom line assets. More recently, we've made pretty specific climate commitments, including moving our portfolio. So that is what we finance. So all of our financed emissions to net zero by 2040. And we committed to do this while really ensuring that we have people at the center of our work. So, when Jeanette's talking about Cleantech 2.0, there's an element of that that's actually also going beyond, the pure technology and also about, your overall business model and sustainability. So for us, how you get to net zero is key, ensuring no one's left behind. But we've also committed to moving all of our investments to be socially responsible investments. And in addition, we manage fossil fuel-free funds as well for our members. And so financial institutions have certain levers that they can pull to make a difference, and they're very different than the levers that other businesses or industries have. So the role is quite multifaceted. And as Jeanette mentioned, Cleantech, can sometimes be specific. I think she indicated it's quite broad, but it can sometimes imply early stage technology innovation only. And so from my perspective, the lens that we take is broader in terms of clean energy financing and that full continuum, of which funding new technology, which some others on the panel will talk more about as well. But it is also about supporting clean energy projects and installations, so solar installations and new ways through retrofits and the like. And so as the world gears up to cut emissions and fight the climate crisis, clean tech is clearly an important part, and banking can play a part too. So maybe just a few specifics, and then I'll pass it back. Obviously the demand for clean technology solutions and clean energy projects, from my perspective, is likely to increase as governments and businesses look to reduce their emissions. So although we have a focus very much on impact in clean tech, it is particularly attractive because of what it can do to help us reduce our own emissions and meet our climate goals. So we finance energy projects such as water to energy or geo-exchange retrofits, but we don't finance early stage direct equity technology companies. It's just not a fit for our overall risk profile. So we support, through public equities as much as that makes sense. And then we do have a fund-to-fund strategy that invests in impactful funds like Active, and some of which are clean tech focused. And so overall, we've been focused on the impact that fund of funds will have. It's been quite successful. And the purpose of that fund for us is not to maximize returns, but actually to maximize the impact while making a return. I think the other push from a financial institution perspective is, most major FIs are heavily invested in the fossil fuel industry. So they have to find ways of improving, what I would call their emissions balance sheet. And so funding clean tech for them, is one way to do that. For us, we're in a different position. We don't lend or invest in the fossil fuel sector. So we're a bit, ahead of it on the one hand, and just really at a different starting point. And so we will need to think about reducing the financed emissions rather than simply finding investments that can offset. So I think, we're seeing, and many of you would be seeing, that banks are significantly upping their clean tech investments as a way of offsetting some of their own emissions on their books from other loans. And I think that that's an opportunity for the clean tech sector to take advantage of as well. So I'll just pause because there are many people on this panel. I know we could go on. So Basma, I'll pass it back to you for others to comment.
Yeah, maybe. So you did mention that you don't finance early stage, and it's important, as Jeanette mentioned earlier, there's different stages, and we need a lot of players to contribute to this evolution of companies as they grow. Maybe Mike can give us a little bit of an overview about the early stage financing. And the other thing I'd like to ask Mike, which I discovered recently, is I was confounding clean tech with climate tech, but you explained to me that these are completely two different things. And, if you can also explain, because Active Impact focuses on climate tech. So what's the difference and how is this playing out at the moment?
Sure. Hi, everybody. Thanks for having me. So Active Impact Investments is a venture capital fund. We have 64 million in assets under management spread across 2 different funds right now. And the second fund is the one that we're actively deploying out of, and that one is relatively new, and it is exclusively focused on climate change solutions. And we do tend to invest at the relatively early stages. So we're looking primarily for seed stage investments with some exposure to Series A. So far, we've made 17 investments across Canada and the US, and we do participate as a follow-on investor as well. So we really see the mandate of our fund as doing a few things. For one, we aggregate capital into a limited partnership structure. So that allows a mixture of different types of investors, all accredited investors. So be institutions, corporate LPs, foundations, family offices, high net worth individuals. but all accredited investors, so they have access to investing in private companies. And thanks to Vancity for being one of those investors, and thanks to IESVic for being one of those investors. But yeah, I think a number of our investors don't want to take on that risk of making direct investments. They would love to have a little bit more of a portfolio approach. They would like to have it actively managed and just get that diversification. And that's one of the things that we've noticed that our portfolio provides an ability to do, and certainly was really highlighted through COVID, when you saw some of the extreme kind of highs and lows of companies getting impacted there. And then we also really see the mandate as being, so aggregate that capital to try to reduce some risk for investors, and then service where the market is not being serviced. And from our perspective, the market had just a giant gap, especially in Canada at the seed stage. And so it was a gap that we were really excited to try to find a way to professionally and responsibly fill. And when you do decide to get involved at that level, we believe anyways, you really do have to be prepared to roll up your sleeves and get involved and try to add support wherever that might be for these early stage founders, because these are incomplete teams, as Jeanette was talking about. This is early stage. And so they'll need things. They'll need help with leveling up their talent. They'll need help with raising additional capital. They'll need help with sales and marketing approaches and go to market. So I'll wrap up with that, and we can come back to any other points later. But Basma had asked the question just around Cleantech and climate tech. I think Jeanette actually did a great job of sort of distinguishing the two, and I would tend to agree with Jeanette's definition that climate tech got a lot broader, right? I wasn't involved in investing when sort of the clean tech definition was around, but I do know that there's still a lasting hangover from those that were negatively impacted. And my understanding was that the early investments were very capital intensive and very sort of research heavy, and they allowed us to get to where we are now, where cost of solar has dropped so much and made it such a viable alternative to allow this energy transition to happen away from fossil fuels. And so what we're seeing now in climate tech is all kinds of different innovations with sometimes enabling technologies. So things that just help to make that transition, or things that help to measure, or things that help to create efficiencies that are capital light, that are software, that are services. Maybe one local example within our portfolio that helps people to see is Clear Renewables. So Clear Renewables providing enterprise B2B software, and that software provides analytics and insights on how to increase the efficiency of wind and solar assets. And so a good example of something that you can build, and you can really kind of pivot the solution many times to suit the needs of customers, that is not particularly capital intensive.
Okay. Thank you, Mike, for this perspective. Adam, what about pension funds and private equity for later stage financing? How do you see the fintech sector, and what is currently, preventing some of the pension funds, for example, from mobilizing more capital towards some of these great innovations and companies?
Thanks, Basma. Yeah, so I'm here representing kind of the long-term institutional investor perspective. And at BCI, we are, just as a quick intro to BCI, we are the investment management service provider in British Columbia. We manage almost $200 billion of assets on behalf of almost, it's over 600,000 beneficiaries here in the province of British Columbia. So in order to do that, we build very long-term views on how the market is going to evolve, and we allocate capital across 5 main different asset classes: public equities, fixed income, private equity, infrastructure, and real estate. And all of those portfolios are broadly diversified globally across all sectors. And so we're really trying to take that long-term view of how the market in general will evolve, and then be able to understand the risk and return profile that we need to build on behalf of all of our clients. So what that means is essentially we end up owning a slice of the economy in some way or another. And so as the economy performs better, we feel that our funds are going to perform better as well. And that's where climate change and clean tech come in. So for our beneficiaries who are invested almost in perpetuity in most cases, we want to see those very long-term economic outcomes that transpire over time that lead to the best potential performance of the economy. And so we do a lot of work thinking about climate change, how climate change could impact economic performance over time, and then think about how can we actively work to both make investment decisions that will benefit lower climate change outcomes in the future, but then also use our voice as an active owner in the economy and the market broadly to try to spur change and make sure that we are collectively working towards those low carbon futures that really do provide the most amount of opportunities to our beneficiaries in the long term. So like Christine was mentioning, we are not invested directly in a lot of very early stage companies, but we do invest through a lot of partners and build strategic relationships into the investment community so that we gain access to all kinds of clean tech and investment opportunities that stand to benefit as the climate change progresses. So in order to do that, we'd have specific portfolios and strategies across all of those asset classes that I was mentioning. We have a thematic equity fund in our public markets department that looks at energy efficiency opportunities and water scarcity issues as a theme and finds investments in public market companies that stand to benefit or are undervalued as those themes and trends progress in the economy. We're also building a new venture capital and growth equity strategy within our private equity department right now, and we're talking to a lot of strategic general partners in the private equity and venture capital space who are actively building direct investments into companies, early stage companies, and later stage companies that are growing and starting to generate more revenue, given the increased attention on climate change and sustainability generally in the market. I think the last kind of key point that I think is really important to raise for an institutional investor perspective is that we really are here to service those beneficiaries, those clients that rely on our fund performance to generate those benefits over time. And so as we think about investing in clean tech solutions, we are looking at that both from an opportunity perspective, where can we get better and greater exposure to clean tech opportunities and build in different types of opportunities into our portfolio. But also we think about it quite defensively as well. So we have exposures in our portfolio to directly held infrastructure assets, for example, that are actively going through this transition. We own electric utilities and toll roads and transmission and distribution companies all over the world that right now are buying clean tech solutions and trying to find the solutions that will help them transition through the climate change realities that are different across the world and in every different region. So while we're not necessarily focused in every part of our portfolio at BC or Canadian clean tech only, because we need to look at solutions globally, there's always opportunities for us to be more active in looking for different opportunities to find the best solutions, partners, and investments that are going to make the beneficiaries that we service better off in the long term. So maybe I'll leave it there, and then we can get into some more questions about some of our specific actions later too.
Thank you very much, Adam. Perhaps we can maybe now talk to the other side of the equation, which is the solution providers, as mentioned by Jeanette. And I'd like to ask Sahar to talk a little bit about her experience in getting to this point, to financing the company, and where next, and where do you see some of the challenges and barriers?
Sure, thank you so much, Basma. First of all, hello everybody. It is a pleasure to be here, and thank you so much, Basma, for inviting me here. Just for everybody here. I'm the CSO and co-founder of Solaires, which is a cleantech company based in Victoria, BC. We're part of Foresight, which is a great pleasure also to meet you, Jeanette, here. We are providing a new solution for harvesting solar energy. So basically what we're doing is we are developing a new material for solar cell applications. And we are a team of 23 scientists, researchers, business developers working together to develop this new technology. We founded our company Solaires February of 2020, right when COVID started. But through a year and a half that we started our business, we have grew a lot. Just to give you an idea, apart from the number of people that we have hired and working together, we are working with different universities in Canada and outside Canada. Only inside Canada, we're working with 6 different faculty members in IESVic, UBC, SFU, Western universities. And also we're working with different industry partners because it is a big project, and we knew that it's like we ourselves, we won't be able to start and finish it all the way. So we had to basically reach out to universities because there's a great asset. We know the value of having researchers and faculty members working with industry and also with different partners inside Canada. So in terms of where we are in in funding and how we actually got here in terms of funding and what is in basically for us in future, we bootstrapped, which means that we basically put in our own money. Everybody invested in the company. We like me and my co-founder, we invested in our company, and not only us, but also it is amazing that whoever we hired, they actually wanted to be part of this journey because they understood the importance of this project. So they accepted to join in with lower salary compared to the industry standard. It's a startup company, but because they believe in the company, because they believe in the journey that we have, they're actually working with us, and that actually helped a lot. They're fully committed. We're all fully committed to the project that we have and basically the goal that we have. We are opening our pre-seed round in September, which is tomorrow. So we're getting ready for that. We are in research and development. It is a project like our project is going to remain in research and development for a long time. So I'm so glad that Jeanette and also Mike talked about like different kind of companies, different kind of projects. Our project, we know that it's going to remain pre-revenue, which means that almost more than half of the government grants and all the basically like investments from bank and all other investment community, it doesn't like consider us because we are going to be pre-revenue for at least 2-3 years from now. So it is, we are left with a very limited amount of support with a big project, with a big goal, which it is basically, it is kind of a shame because so far we always thought about, okay, let's go for easy solutions, faster solutions, something which is cheaper. Let's focus on that. But look where we are now. It is maybe the time that think a little bit bigger, maybe cheaper solutions, faster solutions are not always the best solutions. So like we are working with, of course, like with different universities, which is great. Government has several grants for industries that are supporting universities. And it is good, it is not enough. And the problem is the processing time. Like it is funny, but we started with IESVic about a year ago, writing for the grant. The grant is submitted a year ago, and we still haven't received the fund yet. So that is another issue. Like, yes, government supports, but like we need, the support to act faster than than what is happening now. Same thing with industry. We are, for example, with SDTC, it is a great support. We're writing the grant for SDTC. We have to have partners in Canada. We have to go through the process of finding industrial partners inside Canada for that, which is also another great opportunity, but also time consuming. So we had to do that. We had to support that information to SDTC, but again, it takes a long time to be able to get approval and also receive the money. So those are big challenges. I just leave it here for now. But like we are trying to, like, as a startup, we have to tap into different support, different kind of a government support, different any kind of a financial support that we can receive. But I just leave it here for now. Maybe we can talk later. And also I know that other panelists have should have time to talk about that.
Thank you, Sahar. This is a good perspective on the journey of an early stage company, because there's a shortage of capital, but also other issues that surround the development of the company and so on. Perhaps Chet can give us also a bit of perspective on innovation and you know, you yourself as a founder and working in research and development and, you know, with many innovators, particularly in the Cleantech company. I understand one of your company, you know, Christine was an early investor in your company. So, you know, can you give us a bit of a perspective on some of the funding challenges and how you see this actually being addressed in the future?
I could do that, but I think what I would really prefer to do is to speak about decarbonization and the motivation for clean tech, if I can, just briefly. I started companies out of UVic. I was a professor at UVic. I've started 2 companies out of UVic. And I am delighted to have been associated with the Institute for Integrated Energy Systems, which is sponsoring this meeting, from which an awful lot of innovation in hydrogen fuel cell technology, cryogenic storage of fuels has come, among lots of other areas as well that I'm not qualified to speak about. And I've also had the privilege to be very involved in the Pacific Institute for Climate Solutions, which is an amazing resource within the province for very early stage thinking that's linking solutions to the need. And the need is decarbonization. The need is to globally reduce the dependence upon carbon-based energy resources around the planet. So that's the need, and that's the opportunity. When we think about energy these days, a lot of people think about clean tech, and they think about windmills and solar power, and they think about the mantra of electrifying everything, which would be great if you could do it. But our need, the greatest need for decarbonization, perhaps goes in the direction of utility scale implementation of clean energy. And that represents a financing challenge, which is just enormous. Now, the trick, I think, for those people on the panel, and maybe I'll be a bit provocative, how do you link Sahar's invention and help Sahar to go from early stage development into manufacturing and then into scaling and then penetration of a very well entrenched value and supply chain for delivery of energy services? That is what she ultimately needs help with. And that's a huge financing challenge, because as you move through those different segments of development, she is going to have to learn how to master these very different roles in financing. So perhaps we could comment on that in just a second. The second thing I'd like to just point to is an emerging new need, and hopefully it will be accompanied with new opportunities, and that's in the area of negative emissions technologies. The IPCC report came out last week, the AR6, and it's very clear that in order to stabilize temperatures, we are going to be dependent upon technologies which do nothing more than pull carbon out of the atmosphere. What's the business proposition for that in terms of any sort of even triple bottom line? I mean, without a strong government policy, we are unable to move forward with those developments. And without consistent government policy and without de-risked government policy, it's going to be very difficult to move forward any sort of innovations in that space. So I guess to come back, Basma, to your first question about somebody who's brought innovations out of the lab and into the real world, some of these issues about the ultimate scaling are massive challenges that we face. You know, when a venture capital investor is interested in the at-scale performance potential for the investment. As somebody coming out of the lab, I'm interested in proving proof of concept and first customer. I need a community to link those two things together. And then I need support that's consistent and stable to help me get there.
And I think, you know, I'm going to actually pass it on to Jeanette to address some of these comments. And I see Christine also nodding about, you know, the need for a more of a system-wide approach to addressing some of these massive challenges. And perhaps also others can comment on, you know, how do you see your role in this?
Well, I'm super excited that Jed asked these questions because I am a serial entrepreneur. So I actually have gone through the process of, you know, being in a shop with the inventor, trying to figure out what was really going on with the invention, figuring out what market we were going to go after, drafting patents, all the way up to raising, you know, $12.5 million through the venture capital channels. And I mean, it certainly isn't easy. You know, when you see that graph where there's the, you know, X and Y axis and these whole bunch of circles, unfortunately, that is the current journey that the majority of entrepreneurs face. But that's also sort of the learnings that we really wanted to bring, you know, into Foresight as an accelerator. And we can't check all the boxes, but I would like to think that what we do try to do is provide dynamic support. So making sure that we have access to industry, that we are introducing the ventures to capital, and helping prepare them so that when they go out, that they're received in a professional light, and that the investors are going to be willing to dig in, as Mike said, and do the work with them. You're really building a team. Some of the mistakes I made is I actually didn't hire senior people fast enough. I kept thinking I could piecemeal things together when I really needed to find the best CTO that was going to help me figure out the product and technology roadmap that customers were going to be willing to pay for as quickly as possible. And because I was so nervous about budgets and other things, I should have just had those conversations with my investors right early on. I mean, it's all hearsay. It's all looking back now, so it's a lot easier to do. And another thing, you know, for us in particular, we do not only focus on the CEO training, we focus on the technical training. The Deliver program is intended to work with the CTOs or the engineering team to make sure that the alignment of that product and technology roadmap is going with paying customers. Because when you have that customer discovery and you have that purchase order, it's easier to raise money, it's easier to get government grants. More and more than ever, the government funding agencies, IRAP, STTC, they want to see that you have customers at the table, and then they'll be more willing to support you in all the different avenues. So, you know, whether it's starting off with the seed fund at STTC or it's going to project financing, once you get to that project financing level, you still need matching funds at the table. As a reflection, you know, we supported 350 ventures last year alone. A lot of that was through a COVID-19 response program covering things like, you know, supply chain and having to pivot, you know, given the new environments. But we still do tend to have a lot of great ideas, and we aren't getting them the financial support. We're not capitalizing them enough so that they can make those key hires, they can figure out that customer discovery, and then they're having conversations that are similar to what we're seeing with the US ventures that are starting off with more funding and more support. So, you know, I don't want to do a plea, but I would love to work with other accelerators. I know, Jed, you and I have had a few conversations about this too. You know, how do we get the supports from government to have organizations that are problem market driven, whether we're a nonprofit or not? We want to operate like we want to show the impact that we can have as a support agency, so that Sahar and her team can be successful and get the support from Mike and Christine and Adam and Jed and everyone here. So, but it's certainly anyone who can help tell the story on why those types of supports are critical, and anything the ventures can do to feedback on terms of their gaps. And if the venture capital community can say, Jeanette, we're not happy with the ventures coming out of Foresight, we want to adjust, we want to evolve. And of course, Basma and her team have a lot of input on what they're seeing on supports right out of the academic institutions as well, because there's so many great ideas that they're trying to commercialize there. That's my heartfelt response, but I live and breathe this every day, so.
Yeah, thank you so much, Christine. I think you
Sure. Yeah. Yeah. I mean, I think it's an interesting problem that, frankly, startups have. But then, even as a financial institution, we're trying to decarbonize, and it's the same issue for us, right? So we need to partner, and our model is to think about how we partner for two reasons. First, even if we were successful on our own, it's insufficient for the changes we need to see broadly in society, right? So if we get to net zero in the grand scheme, we're not as large as, any of the large banks in Canada, as an example. And so for us, it's thinking about how do we partner at a system level, to your point, Jed, like with the city, with the province, with builders. For us, it's a built environment is, a key big issue, right, from emissions, or the same could apply to transport. And how do we think about getting the tools to actually engage, for us, our members, so people, to actually want to retrofit, to actually want to take the time and to bother to do their part. And that's only going to happen if we make it somewhat easy, or at least remove some of that friction, and to partner through by having, better policies in place that do require buildings to be built a certain way and retrofits to happen a certain way. And we are seeing much more collaboration and interest in doing that. And our hope, of course, is we can then model it for others to do that, or, hopefully others see us doing it and want to do it right away as well. And I think it is complex. The solutions are, the problem is complex, and hence the solutions are going to be complex. And my only other point is, it's a additional provocative point, perhaps, that, the system of returns is a lot of the issue. And so, Jeanette, when you put your broad view on that, of who the investors are, at the bottom, you could have target returns, right? And it's just part of the system. So if a pension fund needs to get the return for its members, it must request a return, from its venture funds and who need it from the startups. And it creates a cycle of requiring these unicorns and billion-dollar valuations that ultimately, like, really, when you look back, that model has not been working for us as a collective group. And so to undo that, is extremely complex and difficult. So I don't have the full solution, but it will take a different lens to what risk, return, and then impact actually looks like over the long term. Because otherwise, we're going to continue to fund potentially really great individual companies, individual technologies that will not connect at the system level and will not help us actually achieve the goals that we need. But undoing that, right? Like the pension fund needs individuals, someone like me, to say, maybe my pension and my returns should be a bit lower, because we've never been accounting for all the externalities that's created for decades and decades. But it's a very difficult ask for someone to do that on a personal level. So it's really quite complex, but ultimately that's where we need to get to, I think.
And that's a great question, Christine. And I had a similar question to put to Mike on that particular issue of risk, return, and impact. As an impact investing fund, Mike, how do you go about squaring that equation? Balancing the risk, return, and the impact of the companies that you are pre-selecting, right, into your portfolio. And how do your investors actually, I know investors are more interested, such as IESVic or others are really interested in the impact side of the investment and asking for reporting and, some metrics and all that. So how do you go about that?
Yeah, I mean, I think Christine's onto an important point that when you do account for negative externalities that, government or some form of blended finance could be playing a really important role to sort of boost or supplement returns of impact funds and de-risk them and make them more attractive to, those that have tended to be a little bit more risk averse, like the pension funds, or who just simply have a mandate around how they invest. Our approach was not that novel. It was, we entered the space at a time when people were worried about entering the category at all. And so we did decide to focus on venture returns. We tried to, have risk adjusted rates of returns and try to compete with highest returns of any venture capital, funds in the world, and try to show investors that they didn't have to make a sacrifice by moving money towards climate change solutions. So that's where we play. But I think to Christine's point, that does limit the companies that we can fund and invest in. And so there has to be other solutions and sources of funding to support other companies at different stages that have different risk profiles, because it's just not within our mandate.
Adam, maybe Jed wanted to react to that perhaps, and then I'd like to. No, okay.
No, it's fine.
Maybe I'll just jump on that same train of thought quickly here, because I think there's a lot of interest in understanding how pensions actually make those investment decisions, considering all of those factors around long-term climate risk, and how does that factor into each and every investment decision we make. I think the key thing that Christine mentioned here is the crux of the problem is that we probably are not pricing very long-term impacts of climate change into our investment decisions in all cases, whether that's a bank financing, a mortgage in some jurisdiction, or a pension fund investing in different types of assets around the world. And so I'll do a quick plug to Basma here and some of the work we're doing with her and the Pacific Institute of Climate Solutions is to do some research on that specifically, is how can we actually take long-term risks associated with climate change, disruptions that will happen across the economy broadly, and actually put that into a financial model so we can price it into our investment decisions. So that's an ongoing research project we're doing. We're partnering with our academic partners at IESVic and PICS to drive that translation of climate change information analysis, putting it into very specific investment decision-making practices that are the driving force for how capital gets allocated. So, we're talking about pension funds in a broad sense as well. There's a lot of different pension funds out there as well. We have a very specific mandate legislated by the government, and we have to follow that, which is a risk-adjusted return perspective that Mike was speaking to. So those decisions based on where we invest have to meet those risk-adjusted return thresholds that are set by our clients. And that's a fact of how we make decisions. So yeah, why don't we partner and change the way that we are making sure that those decisions factor in all the relevant risks, all the relevant return potential that we can get as we do transition and take advantage of the climate change and clean tech opportunities out there. So that's really where we're focused. That's my team does a ton of work on that right now, and we're excited to partner with others on this. And then the last point around partnership models, though, I think that's critical. And the asset owner community for sure is one that we're actively working on doing a lot of pressure in public markets. We have a lot of initiatives around the Climate Action 100+, which is driving for reduction of emissions across the highest emitting publicly traded companies that we all hold in our portfolios collectively as institutional investors. But there's more work that we need to kind of drive this all down into the private markets. And that's an area of opportunity for all investors to really focus in on, is private market opportunities, and making sure we're finding those, pricing the risks appropriately, and getting the capital into the places where it's going to create the best long-term benefits for those asset owners that need those returns.
Yes, Mike.
Yeah, the only thing I was going to add is while I would acknowledge places where I think government intervention would be well, there already is government intervention, but where more is necessary and would be helpful. I think there is an argument to be made for supporting companies that are financially viable through leveraging capitalism, and the reason I say that is just, we have companies approaching us all the time, and while very well-intentioned and with I believe a true and honest desire to have a positive impact on climate change, their business model is broken for some reason. And so I would say that we did also just come to the conclusion that if a company goes out of business a year from now, their impact will be zero. And so we are looking for companies that we think can scale and be financially sustainable as a way to drive the highest levels of change. And if you can't become financially sustainable, and I say this to a lot of entrepreneurs and founders out there in the market, then you will forever be dependent on these other sources of capital. You'll forever have your hand out, and it's a difficult place to be as a founder.
Yeah. Thank you, Mike, for bringing the business model aspect to the discussion, because I've heard that from others on the supply side of capital, talking about business model breakthroughs may be more important actually than the technology itself. I don't know, Jeanette, as working with companies, and maybe Jed also can comment on this issue of, how do we support companies have business model innovations to become investable and, attract this kind of capital that requires these kind of, more sustainable approaches to business from a viability perspective, I mean.
Sure. I mean, I still do think it comes down to the team. I mean, ultimately they're responsible for executing the plan that they're putting forward, and anyone they talk to needs to have confidence that they can do that. And it's okay to be learning. It's okay to not have done it before, but it's really important that you have a support network, whether it's Accelerator and advisors and other things who've done it before or have the experience to really lean in. And then you can, because at the end of the day, there's a lot of ideas out there. There's a lot of technology. Are the right people surrounding that idea to carry it forward to a commercially viable opportunity? Where business models get really interesting, at least from what we are seeing, an example would be CarbonCure. If anyone's following along, they have done a tremendous job over the last 2 years, and I'm delighted because Robert is here in BC now, so we've pulled him across the country. But they started out with a model of actually doing it themselves and trying to sell the material and sell the equipment, to their market. The cement factories and all that kind of thing, and now they're looking at it as a service model. So instead of that buyer having to spend $2 or $5 or $10 million on a piece of equipment, instead, CarbonCure makes money off of providing the service and the upside opportunity for their customer base. So, and that's just one example of many. I'm a big fan of Clear. I know Mike brought them up. I put the link. They could have done a lot of things. They could have. But software as a service in climate and clean tech is just a great model. It really creates a long-term value for the company. And again, they have to prove that they're going to be able to help this customer achieve their goals through the use of their technology in order to get paid. So those types of de-risking. Now it still has to be responsible. Software is obviously a lot easier to do than hardware, for example. But there's certainly going to be a lot of interesting things happening on the business model space that will really accelerate adoption and make some of those laggards or traditional sectors that are just less comfortable with risk and innovation, even though we're saying it's going to make you more competitive globally, go for it. Their culture internally hasn't had to deal with that. So there's a lot of steps along the way, but certainly getting the right team and the right business model are the top two things that we really try to focus on for our supports and engagement.
I'd be very interested to hear from the financing people on the panel about how they would view companies coming forward if they had broader international support right from the get-go. So I like to think, or I try to think, who's missing from the party, and I look around British Columbia, and what we have missing are big global emitters, big poisoning companies that are out there who have a desire on the part of their investors to provide that return that Christine was talking about in an environment that's going to require that they decarbonize. There's a massive pent-up need for decarbonization. How important do you think it is for British Columbia, Canada, to get out of its own provincialism and nationalism and really go global and go international at the seed and early stage? Is that too big an ask for the seed stage companies, or do you think it's something that should in fact be built into even a seed stage plan for technology and device developers?
And Jed, do you mean investing in seed stage globally, or that the seed stage companies here have global relationships?
Global ambitions. Yeah.
I think the latter, but it wouldn't really matter, Christine, if you want to speak to the former as well.
Well, okay, so I haven't done early stage investing for a long time, so I would maybe leave that to Mike. I mean, my only experience is that on the former, which is to invest in seed stage globally, it's super hard to do that when you're, you know, as Mike said, you're trying to be connected with the company. Now, perhaps that's easier today, given new technology to be connected, but that's typically been the difficulty. I mean, yeah, maybe I'll let Mike or Adam answer first, and then I can add in.
Yeah, well, my take would be absolutely companies in BC should have those ambitions, and that would make them a more valuable and a more investable company and would show more potential for scale. You know, I think that the trade-off and I think what some companies have to be, or all companies have to be careful of is just it's a matter of focus, right? It's what market or group of customers can you land first where you have a high concentration of success before moving to other areas. But assuming they had that tackled and in hand, then we would be thrilled to see sort of global interest, global involvement. And I think what you're touching on is a really important one with some of these dirty industries. Is I think we could impact a lot of positive change just with better procurement practices, right? So you see a lot of the multinationals sort of rushing to go out and make some acquisitions, which is interesting, and you know, that's part of the solution. But early stage revenue for these companies is that's the lifeblood. So important, and allows these founders to hold on to the companies a little longer and reach scale. So that's what I would love to see. I'd love to see a little bit more pressure on some of these dirtier industries and companies to force procurement with new innovations.
Mm-hmm. And Sahar, from your perspective, what would it take to get you to these global ambitions and, you know, think bigger than, you know, just locally and deploy your solution? Is it the chicken and egg problem, like, you know, the funding to get there, or how do we solve this issue?
Yeah, so actually I would say that with okay, so there are a couple of things. Like we talked about, like the government, how government, like putting like all the different resources together in order to provide basically the help for early stage startup in Canada. I would say that this is great, but Canada has to act fast, because me as basically as a startup, I'm starting in Canada, but I can see potential outside Canada. Right now, I see that there is like lots of money in the US, like just Department of Energy US, like a couple months ago, they just allocated $14 million just for one subject matter in Cleantech. And they said, whoever works in this area, just come, we provide the fund. We want you to work together. This comes from like the knowledge, from the information that the government has, which is lacking, still lacking in Canada. Still, when I talk about solar cell in Canada, people ask me, solar cell works in Canada? And they still don't know that actually compare Canada to, let's say, Germany, we have more potential for solar, but Germany is way ahead of us. So I'm facing those questions inside Canada from like all different sorts of basically funding. And I'm being in the same basket as you as a solar company, that you are trying to have a kind of a radical technology that is going to change the technology of like providing electricity from solar's energy. And I'm being compared to like software companies that, yes, it is great. They're going to like be educational. They're going to create an impact, but they're less energy, basically capital intensive compared to mine. And also the impact that they're going to have, it's going to be like maybe for a shorter time. So I'm being in the same basket. I'm being like compared to these companies, and I'm always being out because they don't see that I'm going to have revenue, that they don't see that I have a product right now. Of course, it's not going to be today. I still need the support to be able to the stage that a software company is right now. So having all these things, I'll be pulled out. I have to look into resources outside Canada because I don't see the support here. I just like a couple of weeks ago, one of our competitors inside Canada is moving to US because they're in the same challenge as we are right now. I don't want to move out of Canada. I do want to see the support inside Canada, but if none is available, then maybe in a year so I have to think about like either moving the company outside Canada to US or Europe, because they have the focus group just for specific, like different kind of subject matter, different kind of technology. In Canada, everything in the same basket of like clean tech, like that it is comparing like Apple to car. And of course, like I don't see how they're actually going to choose which company is going to get the fund, which company is going to be out, and which company has to wait for the fund. So in terms of like going global, that's definitely the approach that we are like seeking, because yeah, we need to work globally. It is not something that we can, I mean, that would be great if we can like have the technology inside Canada, but it's not going to be viable, and it's not going to be something that we're looking for. Basma, you're muted.
Yes, I know. I keep muting myself. I lost track of time, and we were hoping to take some questions from the audience. I don't know if Andrew is here to help me with that. And maybe one last question. I don't know who in the panel would like to address this, but do we need like more financial innovation in the kind of financing structure that we are that are available right now to enable, solving some of these challenges, like, more patient capital at an early stage without the big pressure of, revenues or kind of, these issues that Sahar is talking about. What's the role of the financial industry in solving these issues to prevent that Canadian companies end up leaving and going to other countries because of lack of funding? I think this is a serious issue, and does Canada risk being left behind if we are not, keeping our companies local? Because I've heard this many times, that there are some gaps in funding that lead some companies to leave. And maybe that's, it's good for the planet.
Not only funding, it's also customers, right? Like if Dr. Sam has to, sorry, I was going to call you Sahar, because if that goes to, if their biggest customer is somewhere else and we can't get procurement and adoption here in Canada, it's like Christine mentioned, when you were doing investing, you go where it's easy to work with your customer, because it's right out of the gate. There's a lot of back and forth when you're doing your first pilot and you're commercializing. So to have distance, I mean, now there's technology to support. And then once you're there, you're creating a network there, and then you start to meet the investors there, and then it's pretty hard to get them to come back. I do think there's a reimagining though on what ROI is expected across all stages of the investment pool for clean tech. Christine would have a lot more to comment on there, but I think there is money. I just don't know if all the buckets are structured in the way that is really conducive to supporting a highly impactful innovation community. And I don't want to start calling anything out, because we partner with a lot of these groups. They're doing great work. They're trying their best. But I had the opportunity to have a great conversation with Minister Champagne, and he's saying, what can we do? And it's like, it's not the amount of money, it's sort of just the flexibility you give these innovators. They know exactly, if you have a smart team and you trust that they're going to execute, if you put too many boxes to check, then they're going to find the money that's a little bit more flexible, because what you say today might change in a few months. And if you change it, then they're going to come back and take the money away, even though you've commercialized 10 times faster than you would have. So those, I would say, are some of the policies and opportunities for discussion that I could be really cool to dive into.
Yeah, I would maybe just add, I mean, I think there's absolutely room for innovation in terms of financial products broadly. I mean, it sounded like some of the issues being, mentioned or even from an R&D perspective, and that's government financing as well. So likely there's typically room for innovation in that area. I think at the same time, sometimes we have tried things and we've not had any demand. Like even, we've tried to do things differently from a shred financing, and there wasn't enough demand for us to bother, So I think that there's an opportunity definitely to be creative, and then also needing to see sufficient demand is like anything in terms of supply demand, to take the time, because if you do one of those deals out of a year, it takes a lot of time to think that through compared to if you can do them more often. So it is complex. And to clarify all my comments on risk, return, and RI, companies still need to be sustainable over the long term from a growth perspective and a profitability lens. It's just adding in that layer of ultimately what is success, right? For what we need.
If I could just comment on the comment that's been brought up first by Sahar, and then we're talking about this need for capital and change in the ROI. We get it, right? We understand that ultimately that ROI has to be there, but maybe to speak a little bit in support of Foresight's efforts, the idea of creating an ecosystem that can go the distance is so important. And one of the fears that I have for creating a burgeoning clean tech economy is that by virtue of what capital is accessible and what isn't, we have a bias toward information technologies and relatively capital unintensive business plans, when the need for decarbonization doesn't really figure in that. And so my nightmare is that we have a burgeoning clean tech industry and we continue emitting. That's a tragedy, right? And that's what we have to keep in mind. I'm going to always come back to this question: what's the best for the planet? And I don't know how we put that into the finance framework, but it's got to be there.
Yeah, and I think the panelists talked about, factoring in, the risk and the externalities, in their investment decision. And I think that's an important aspect to decisions as well. Mike, sorry, you wanted to add something?
Yeah, I was just going to say, for what it's worth, the good news, just going back to your comments, Sahar, and some of the questions around, are we losing, is there a brain drain? Are we losing people across borders? Not from what I've seen. I would say, the last 2 months were the highest levels of venture capital deployment in history. It's never been easier to raise money. It's never been easier to raise money for climate tech. And investors have never been so willing to invest across borders. So American investors that we talk to are very happy to invest in Canadian companies. That was one of the positive effects of COVID, is people moved to Zoom screens and figured out that they were more comfortable going much broader geographically. We were chatting with Union Square Ventures a couple of weeks ago, and they have changed their strategy, and we've talked to dozens of investors who've changed their strategy over the course of the last year. So I don't see that happening. If I was to comment on where we see a challenge, it's that there's so much money that's getting poured into the market right now, which is a very, very good thing. But it is almost all upstream, right? So 19.1 billion that went to climate tech in VC this year was in just 5 funds. So when you think of that number in 5 funds, and when you think of what fund strategy is, which is typically to invest in 15 companies or so, gives you an idea of what their average ticket size would be, which means you need companies with massive revenues and massive valuations in order to be appropriate for that funding, which leaves a big gap at the early stage. And so that's what I see as being sort of the bigger issue right now.
Yeah, and I think Jeanette mentioned earlier that the angel investor, community, maybe there's some gap there, and although is changing and the dynamics are changing a little bit, maybe because of COVID or more awareness about climate change, but hopefully that gap will close as we go, because we see a lot of activity in other countries. It's probably missing a little bit here. There was an article in The Economist talking about the billions pouring into clean tech, and when you read about that, it's you would think there's absolutely no problem getting funding, but at the same time you talk with entrepreneurs and companies and you see how much struggle they are facing to be able to grow and scale up. So definitely there's some sort of unequal access and some issues that perhaps we need, as you said, more collaboration, right? And partnerships to solve some of these issues. I'd like to call my colleague Andrew Rowe to say a few words. I'm sorry we ran out of time. Thank you so much for still sticking around from the audience and the panelists. The chat has been quite active, so maybe we'll skip some of the questions there. And Andrew, I'll let you.
Okay, thanks, Basma. Yeah, I won't say too much. Basma sort of nominally put me in the schedule, but so I'm the director of the Institute for Integrated Energy Systems, and we've got a couple of great representatives on the panel for IESVic with Sahar, Sam, and Jed McClean. But I did want to just echo a few points that Jed had made, and maybe end on a high note or a bit of a positive note. So IESVic's been around a long time, and we really got started with some focused work in hydrogen energy storage and really techno-economics to try and understand where these key technologies should go and how, the role they play on the larger system. And over the years, we've evolved. Hydrogen funding came and went, and good academics tend to respond to that and of course find other places to move their efforts, which we've done. But what's interesting now, if you look at IESVic and how we've evolved over 30 years, most of the new membership and the new activity really is now in this field, is what I'll call it. Not exactly, but moving closer to, I guess, where the rubber hits the road and how you really mobilize the money to get the ideas into action. And so we've gone from being kind of a hardware institute to a software, and I use soft in a vague way. It's not just about software we talk about. But the best things we've done when you look at IESVic and what's come out of the institute, we point to a lot of academic papers, but really, and we've got a lot of patents, right? So we're really at the front end of technology development. But probably the most impactful products we have are people, and so I'm a product of IESVic, Jed is, so is Sahar, and there's many other students that have come through, either as undergrads or graduate students who've trained really in a technology-heavy environment with an eye purely on sustainability and decarbonization, who've gone off into all sorts of places in the economy. So anyway, I just wanted to wrap up because I think that's a positive. The other positive I see is that we're together in this room, and I've always felt like IESVic has lacked that piece that connects really bright HQP who've got really good ideas, but they've got no training in moving into the business space. And so I know I've talked to Jed about this because he did it, and Sahar did it, and they probably got interesting stories to tell how they decided to take that risk. But de-risking that activity of these smart young individuals going on to take on the business development, to me, has always been the missing piece. And I think I'm happy to be here and happy to be in the MOU with Foresight, because I think this is really the essential piece we need to focus on. So as Basma said, I think we're out of time. Maybe I'll just quickly thank all the panelists. I really enjoyed this. This was something different for me, and I've learned a lot. And I really do hope we see more of these events as we go forward. And Basma, maybe I'll pass it back to you.
Yeah, thank you so much. I'm very happy also to be here and thank all the panelists. I think we're running out of time, so I'm going to save the last question that I mentioned before, but thank you. And we really look forward to having maybe more conversation. We had a keynote speaker in the conference who talked about the knowledge co-creation and the importance of partnership and collaboration to tackle serious issues like climate change and other things. So hopefully this kind of platform of collaboration, just have some ideas and hopefully the academics in the audience took some ideas for research going away from this panel, and thank you very much for your insight.
Thank you. Thanks, everyone. Talk soon. Thanks, Basma. Great.
Bye.
Thanks.
Thanks.
Thank you so much. Thank you. Bye.